Righto, happy Australia Day, everyone. Nothing better than this fucking getting a dingo up here during Australia Day, mate. Oh, love it. WA, I better get a carton on the way home tomorrow. Bottle shop's open on Australia Day. We're recording the day before here.
I'm not sure.
No
I
idea.
quit beer, Matty.
Oh, okay.
I'm on the red wine.
Oh, yeah, they don't sell wine at bottle shops. Yeah, righto. Oh, boys, right. Now, let's give a bit of bloody context of what this episode is today. We threw it to the money miners. Just ask us whatever you bloody want. Random as you want. Could be mining, could be personal related.
We actually don't know, which is interesting because we've asked Ali to compile the questions and choose the best of them and kind of direct traffic for this episode.
Which JD's loving.
So excited.
Yeah, no notes.
Can't wait.
JD loves off the cuff.
I think underlying it all is we're keen to engage as much as possible with the money miners. And if you've got questions, we do think about them, we ponder them about them, and we want to be able to answer them if there's something that we can answer.
You know why there's something about Australia Day and what highlights why Australia is such a beautiful country. It's because Seamus Murphy moved here. From an English background, Seamus Murphy he scanned the globe and thought, where is the best place in the world to start anytime exploration? And he chose Australia. Is that not a testament to our country?
You make some sense. Yeah.
Couldn't have
said. But the real question is, how is someone with the name Seamus an English bloke? Surely that's Irish.
Oh, he's probably got a bit in the blood, I reckon.
He says mate, I can't believe it.
What a gentleman of a bloke. And look, Anytime Exploration is our first ever partner is just talk about fitting the bill for what the Money and Mine partners are all about. Like another person that has never said no in his life. I think the reason he has an all-terrain vehicle to supply to exploration companies is because someone rang up and asked for one and he went and bought one that afternoon. Like he fits the bill because, mate, between all the core cutting, the people, the equipment, the soil sampling, and now the mineral resource estimates and geological consulting for Anytime Exploration, mate, what is next? What is next for Anytime?
You know how you said he can't say no. He just says yes. Well, I've found that when I look Seamus in the eyes, he's got these piercing blue eyes, and I can't say no. You
just say yes before the question comes out.
He's
got a way. He makes me want to say yes.
And because of that, he also has managed to get the best bloody people to be working for him and to be available for him from a labour perspective because you just ask them and they say yes and they're just captivated, mate. It's like...
Mate, I'd say the best people, the best equipment, but giving you the best chance to find gold. Like just...
Or other minerals.
Other minerals. Like just put everything in your favour, get Anytime Exploration on board to do... They won't give you the best mineral resource estimate because they give you the best correct mineral resource estimate. But, mate, love it. I can't... If you're going to take a bet, what's he going to come out with next? What would you say? Sky's the limit for Anytime Exploration.
It's the sky's the limit, mate. They might be able to find minerals in the sky too.
He'd be great on contract negotiations because he just walks in there like, yes, you can have it. Because he's got that presence. Thanks, Anytime, as our first ever partner. Now, we figured out this week, boys, that DSI are about to make a fortune out of Adriatic after they've had to upgrade their ground support.
When you put in your announcement that, you're putting in more ground support, mate, you should just insert the name DSI there to assure the market. I would like to see in
brackets so we hence had to chuck more DSI orders in because...
Fill the market with confidence, right?
Because I just... Right. Correct me if I'm wrong out there, but I could not see a company that is heading towards that critical point of first production.
Very critical.
Taking any sort of risk with a ground support supplier other than DSI. Like they are the true proven global supplier of ground support. That is the only name that you need to remember, boys, because how much did you know about ground support before this?
Absolutely.
Sweet fuck all. But now when I say ground support,
I think DSI.
You just say DSI.
I think if you use
it is a household name. That's all you need to know. DSI splitties, mesh, GUIs, cables, MDX bolts, bloody portal sets. Mate, tell you what, mate, if you need personal support, they'll probably give you that as well. Like, there is nothing, no amount of support they can't provide.
You know what, mate? If I was an Adriatic shareholder and I'm reading that announcement, if they say we're putting in more ground support, I've got fears. But then if they say, but we use DSI, mate, rest assured, confident.
If I found out that Adriatic weren't using DSI, I'd probably sell all my shares if I had them, like just instantly. Like, it's just, I know it's in safe hands if DSI is supplying it. So, mate, Derek Hurd and the team, mate, thanks for all your support and thanks for making the ground safe to bloody get the dirt out. Love your bloody work.
Love it.
Right, we've got Ali GC man in the bar. Let's cut to
Good afternoon,
Cut to GC.
boys.
What's going on over there, mate?
We're in your
First
hands,
time
Ali.
filming from the bar, which is pretty exciting.
You got the vino in front of you, mate.
Got the vino there. Got a whole heap of questions from the Twitter sphere, the Herder group chat, emails, bloody everywhere, basically. Got some real juicy ones here as well.
Are they a bit diverse, GC?
They are quite diverse. Yeah, a bit of everything, bit of personal stuff, bit of heavy hitting and analysis stuff. But I reckon we get right into it.
Right, let's go. Oh, free reign. I love this
So
shit, JD.
just because I know how much JD hates the lack of preparation, I'll throw the first one out to you, mate.
Let's do it, Al.
So this question actually came up a fair bit across all platforms, which was what are the key things to look at when researching a mining company and perhaps how they differ from, say, an exploration company to a production company. And then a follow-up question from me, what are some classic red flags to keep an eye out for when you're going through this process?
Okay, so specifically mining companies we're talking about here?
Yeah.
All right, let's sort of...
Pharmaceuticals.
Wow, we can break down...
It's a mining podcast, you dickhead.
Exploration. Well, we'll leave exploration for later then.
Yeah.
Okay, so mining companies, I mean, where to sort of start? First up, management. Look at them. Do you know them? What have they done in the past? That's the first thing on the list. I won't go in order, actually, but next up, jurisdiction. Are you comfortable there? We've spoken in the just this week alone about West African, very different to Regis, who we've also spoken about.
Yep.
Also,
beware of Congo and Russia.
There's a few more.
there's a couple other I chuck on that list too.
They're a couple of the big ones.
Alrighty, now next up, pretty obvious, but what commodity are you talking about? Are you talking gold? Are you talking uranium, lithium? Commodity prices, you know, by and large dictate where the stock is going to go. If you're a mining company, obviously very different, which we'll get into for Matty, the developers or exploration companies.
I think because we're probably talking to investors of all sorts of experience levels here as well. The classic one for the retail punter that's just, I want to get into shares. And I heard it the other day. They're like, I bought nickel. I bought this nickel company because, mate, nickel's going in all the batteries. But you got to know the recent news of that commodity, what's happening in that commodity at that time, because nickel is going into batteries, but it's in a heavy surplus and nickel mines are shutting down everywhere because the cost is low. So you got to know what the commodity is doing at the time.
Yeah, and don't believe the headlines. Obviously, you talk about nickel there and it's gone into batteries and stuff, but 70% of the stuff still goes into stainless steel. So you've got to really understand what drives the actual commodity you're talking about. Okay, next up.
All right, that was very good.
What about
he's got
cash,
more.
JD?
Well, if we're getting into the actual fundamentals of the stock, how much cash... Debt is obviously super, super important. I think we emphasised it on the show yesterday, but you can't go bankrupt if you don't have any debt. So that is super important. And then there's more sort of niche products on the liability side of things with mining companies, like do they have a terrible hedge book or something like that? Because they are liabilities that can sting them. And there's other sorts of things along those lines. And then once you just really want to get a feel for a company, you start to find a company you like, listen to the quarterly calls, get a feel for it. You can hopefully listen to the CEO or the managing director speak. You can listen to the other key people and get a feel for whether you actually trust the people.
Now, another one's on the balance sheet. You look at the 5B, they call it, every quarterly report. Now, remember that none of this is financial advice. We're just you got to seek a financial professional to get that, and we are not that.
I'll make it clear we're not experts in this. We're just explaining our process of giving you the show
This
every
is
day.
our process.
Massive asterisks. There are people far smarter than us out there.
Yeah, but the biggest one, if you're going to buy stock, you're like, right, when's the best time to buy? And the biggest determinant of that is how much cash they've got in the bank. So if you're on, as you said, you're talking about big companies there as well, but like your exploration companies that aren't making money, but they're constantly spending money, looking at how much money they've got left in the bank and how quick they're burning through it. Because if they've only got 500 grand, you know they are going to have to raise money soon. And whenever they raise money, they raise it at a lower share price and the share price goes down. So if you buy it before they raise, or there's a risk that they'll raise soon, you're going to instantly take a hit. So knowing how much cash they've got in the bank and any cash coming in from anything in the runway they've got, you have to really, because that's where you can get burnt pretty frequently.
I've just got one to add to your list there, JD, and I know it's one you look at too. And it's really the holy grail of mining investment, and that's where does the asset sit in the cost curve? That's everything. Like the cost curve will tell you absolutely everything. Not the cost curve the company puts out there, but the actual cost curve of that commodity. Because like the cost curve is the moat in mining businesses. When you're producing a commodity, which is by definition fungible, how do you actually have a defensible moat? Well, it actually comes from where does your production sit on the cost curve?
So green bushes are right at the bottom of the cost curve in the first quartile, and they will be one of the very few lithium companies that will continue at these prices, whereas the rest of them will struggle and or shut down.
Absolutely. I think that's quite the list to keep the money miners busy.
That's why it's worth so bloody much.
No, very good points there, guys. And actually, this is a perfect segue into the next question. So, Trav, do you think mining companies should have to state their trade debtors and creditors in quarterlies, or the Appendix 5Bs as they're known, to prevent them from fudging their cash balance?
I actually really like that one. Yeah, I've never thought of that as like a proposition, but I really, really like that. I do think that would be a really great development of quarterly reporting, because there's absolutely a trend where mining companies will push paying their invoices until the day after the end of quarterly, just so it sort of artificially shows they've got a higher cash balance, as at 30 March or as at 31 December, those sorts of numbers, because that dynamic.
And otherwise you don't find out that information till the half yearly, which may be months and months later.
And so the poor ass bloody suppliers with these mining companies are being used as their biggest creditor and not getting paid on time just to please the share market, which is puts a lot of stress, even though it'll be disclosed anyway. But the fact that small businesses get penalised by companies delaying payment for that reason, it's bloody shit house.
And then another one for you, Matty, is should the concept of all-in sustaining costs be binned as a reporting metric and be replaced with all-in cost, i.e. including growth cap, tax, exploration, all the rest of it?
Well, the copper byproduct deduction should definitely be binned. That's just absolute bloody load of shit, I reckon. What the appropriate metric is, I don't know. But as we said, we know that for underground mines, your decline development and things like that can be chucked in as growth capital, and whereas it's at the mercy of the company to allocate it how they do accordingly. I don't know if anyone's if the regulators can go through and say, where did you attribute that part of the decline to? Was that in sustaining capital or growth capital?
I think that's the exact point there, Matty. These things aren't held to account by any accounting standards, so they're at the discretion of the company how they report these things. So, whether you like all-in sustaining cost or not, everyone still uses it, but not everyone uses it to the exact same degree. So they can fudge around with it.
But it's just it's that headline number that until you start digging into, let's see where the growth capital's gone, the plant and maintenance, and then all the other financing costs. Like it's just a lot of the fundies and all the people I talk to all from the start of this journey is like it's just cash build. Like how much cash is going in and out the door.
Yeah,
it's like
which all-in sustaining cost doesn't show.
It's just like I know it's like maybe an operational metric to show what, but then you want to see, you just look at the sustaining capital plus because that growth capital and exploration that is being charged on top of the all-in sustaining cost that is needed to keep that operation going and keep it growing. So
It is sustaining.
Exactly. Beyond to keep it going past a year.
Yeah.
Like you need that money
to
needs to be spent. So it's like you can't just put it in a separate pile, because if you don't spend it, that operation then becomes unsustainable.
Yeah.
So it just all has to be put together to see if an operation is going to be profitable long term.
We had a former colleague, JD, Ali and I, we all used to work with a guy called Johnny McDonald. And
Johnny Mac.
You would have heard of Johnny Mac.
Oh.
So Johnny Mac.
GC.
Johnny Mac had a real reputation he's retired from being a research analyst these days, but his reputation as a gold equity analyst was he was like not afraid to go against the grain and sort of call it as he saw it and all that sort of stuff. And he built up a lot of respect in the industry by just sort of calling it how he saw it, not how the incentives of the institution was that he worked in. And Johnny Mac, I think he might have come up with a metric, or he certainly did his best to try to popularise it. But he tried to introduce his own metric called the CAIC, CAIC, corporate all-in cost.
Corporate all-in cost.
And maybe we should popularise that one on the show in tribute to Johnny Mac, because it's a pretty nifty metric that kind of cuts out all the crap like you just talked about, Matty. And you kind of imagine if every mining company put the CAIC in as their cost instead of the all-in sustaining cost.
That is pretty much saying this is the dollar per ounce for this whole organisation. So I know we talked about Northern Star the other day per operation and what they're making per operation, but you want to see, right, for these big companies, are they running their corporate overheads lean and using it, or is that a big massive bloody cost on top that is then making them not a massive company? So it'd be good to imagine if Johnny Mac released all those numbers for every company. And that
he
was
used to, yeah. He might still do. But yeah.
Bring him back. Bring back the Mac.
The cake.
Bring back the cake. I'm a fan of that. I love it.
Awesome.
But isn't it like it's? I know you're looking at development projects and stuff, but then I guess growth capital going into existing operations, like isn't it as simple as looking at, right, is the business making money quarter on quarter? Like, is there a cash build? Look at like Ramelius and Silver Lake. They've just cash builds on quarter, and they just keep going up. So as a business as a whole, those operations and the corporate structure is making money. So just sometimes keep it simple.
Mm-hmm. Very good. Alrighty, next one was a paraphrased question from Michael Melton off Twitter, talking about commodity price forecasts from banks and research houses. So these commodity price outlooks just seem to change drastically period to period with these sorts of groups. Do they even make sense fundamentally half the time? And should we really be paying attention to them? And Michael's referenced the Wood Mackenzie lithium price deck in this example.
Forecasting commodity prices is insanely hard. So I'd preface the answer with that. And then, I think the first thing that was mentioned was the analysts and broker analysts. So you can obviously always look at the incentives of the analyst to get into it. But I think there was another question earlier around macro forecasts. Our forecasting these sorts of things is, nigh on impossible. And obviously you need to sort of use them in all the models. They need to be used, as we sort of spoke about at length, in the terms of Liontown when you're getting financing and all these sorts of things. But I'd always be weary of anything that seems too good to be true, anything that's crazy, especially when you're looking at the forecasts that are used in company reports. We've spoken about certain companies that needed to use commodity price forecasts that were double what the commodity is currently priced at. All these things are big red flags, but I don't think I've got a much better answer than that. I think it's just super, super hard, and you need to just build a lot of conservatism into any model in which you're going to ultimately invest in a company.
But is this, a lot of these were the price forecasts independent to the companies, wasn't it? Like you're talking about Wood Mackenzie, and like the example was like, Goldman Sachs and their real low lithium price forecast, where Morgan Stanley had bloody tenfold difference. Like, I think it just shows, depending on which house it comes from, they can be so bloody different on their interpretation, because it's all a crystal ball thing.
So even an independent, like let's use Benchmark Minerals as an example, right? So they're independent.
Yeah,
independent,
exactly.
Right? They're not an investment bank, but they make their money by charging all of the lithium and graphite companies out there $40,000-$50,000 a year to get access to their data platform. So their incentive is to be bullish, right? Like you can't, so even the independent ones, I think you got to take with a grain of salt.
Who would be, would you class as independent? Like your Goldman Sachs and all that. Like, are they not even independent, really?
They're big, so far from independent.
They're not
even funny.
Like having worked in like a big bulge bracket, most of the commodity price decks they put out, they'll have models and there'll be a strategist behind it, which hopefully doesn't have some, like individual person will have some influence over it. There'll be a model to justify it or whatnot, but they still get it wrong all the freaking time. And like history will show you that what tends to happen is banks simply follow the commodity price. So if the price goes up, all of a sudden they'll readjust up. They won't actually predict it. They'll just tend to change their deck based on what, they'll follow the commodity rather than predict it. Even futures markets don't really predict commodity prices very well either, but the literature shows that, investment banks certainly aren't great predictors of commodity prices.
Well, I think copper's been your best example for the last 3 to 4 years, talking about all the action it was going to have and how quick it was going to happen and companies pivoting towards it. Look at Bill Beament with Develop, pivoted to base metals because it was supposed to go a lot quicker than it has, and it just hasn't taken off yet.
Yeah, I mean, and I think to exactly your point there, Trav, look how many downgrades we saw in the price forecasts for lithium over the last month. The line just drops by, in some cases, thousands of dollars per tonne. So, yeah.
Very good. Right,
nice
next
one.
up, GC. Bring it on. Keep it rolling.
Keep it rolling.
Love the money miners.
So we've got a bit of mining terminology 101 from across the online stratosphere. So first one, we'll do a rapid fire.
I gather that's coming from me, not these two.
So, Matty, what the hell does nameplate capacity mean?
Well, that probably does come from you too. Well, nameplate, let's use Gwalia, 1.4 million tonne per annum. If it's operating at 1 million tonne, which it is, it's not operating at nameplate capacity. If it's got and we talk about ramp up, so someone's built a 2 million tonne per annum plant, that's our 2 million tonnes of ore will go through that crusher and then go through the circuit to produce X amount. But if they're only putting 1.6 in, they're operating below nameplate. Nameplate is the target that mill should be running at based on how it was designed. They always try to go over if possible by better utilisation, less downtime, more efficiencies and everything. But it's that initial guide of what that mill can handle for the actual fresh rock throughput.
Perfect. And they're not sure if they're mining or money of mine terminology, but we had two people ask, what does GC mean? And hey guys, what's this hootaroo?
Okay, GC, G is for good. C is one of the words I'm never allowed to say on this. That's all I can say.
It comes from underground mining though, right? There's a lot of something C's in underground mining. TC,
I think it just comes from Australia. It's just an Australian term that is like used as either an aggressive term or more so in this day and age, a term of endearment. Like it can be fleshed out either way to be either a compliment, a question, or an accusation. It can be anything. Now, hootaroo, the foundation of hootaroo. So when we first started Money and Mine, at the conclusion of every show, I would say, righto, everyone, hooroo, hooroo, hooroo. I'll just say hooroo. It's an old Australian term. It's just like, right, see you, mate, hooroo. And obviously JD's grown up in the Golden Triangle in Perth and never been exposed to people like me. So after showing him the way of what the more feral part of the world lives like and speaks like, he thought I was saying hootaroo. So he started finishing off the show saying, right, everyone, hootaroo. And one day I was like, JD, what the fuck is hootaroo? He's like, that's what you've been saying. I'm like, no, I'm saying hooroo. And he's like, I'm like, right, who? And then everyone started saying hootaroo in the comments.
we got emails signed off hootaroo to us. Hootaroo. And I got to say, you only pulled me up after sounding like an idiot for about a month. So here we are.
Here we are. And then what do you know?
Now we've got hats.
Now we've got the Hootaroo group chat. We've had Hootaroo hats with just everything was bloody
Herald.
Hootaroo.
The Herald.
We have made up a word.
I
Bloody
love that.
brilliant.
You
That's
enlighten me
actually
every
the
day,
first
Matthew.
time I've heard that story. I love it. I love that. Very good. All right, back to some mining stuff.
JD, the Golden Triangle he grew up in is not the one in Cambodia and Laos and all that.
Very
the one in Perth.
Very different.
Yeah, JD is not a heroin dealer.
Just needed to clarify that one.
Yeah, just in case.
Got two Cambodian listeners.
Oh, very good. So we've got one from the Contrarian on Twitter. Why are we so obsessed with nickel and cobalt when the trend is with LFP, lithium iron phosphate, batteries, and soon to be LMFP, lithium iron manganese phosphate batteries? Who's got it wrong? And a follow-up question from me. If NCM, nickel, cobalt, manganese battery technology is obsolete, in inverted quotation marks, and there's a wall of Indonesian nickel laterite supply coming online, is Australian nickel dead?
All right, I reckon we can break down the question to a few different parts. Firstly, why are we obsessed with nickel and cobalt to start with? Australia has a long history mining nickel, very different applications back in the day, but like we said earlier, by and large still made for steel. That goes back to the money miners, which our sort of show's name comes from. And cobalt was always used in the batteries in a small way for the various attributes that it could provide that was far better than most other elements. So cobalt has been, people have been trying to get that out of batteries for a long time. That's been going on a while now. But you don't have to cast your eyes too far back to think when NMC was the dominant technology for batteries that were the sort of quote-unquote premium batteries, and that's what a lot of people were betting on, even Elon Musk saying, everyone give me as much nickel as you can possibly find.
And the whole theory was that they were going to get, if they were going to be applied to EVs and everyone was going to be driving an EV, they were going to have better range. So you were going to be able to drive further on them without having to recharge all the time compared to a lithium iron phosphate battery. That was the consensus at the start.
Yeah,
but
and
things have rapidly changed, haven't they, JD?
Yeah, and those batteries, they have better energy density, but it turns out the majority of the EVs are being bought currently by China. They don't have the same range anxiety that we have, and they are far more happy to have a car that can go 200 to 400 kilometres-ish. So that's where the massive growth in battery demand has sort of come from. Where battery technology goes, I think, is sort of anyone's guess. These things are moving so fast. It's insane just to read about what Cattle and the likes have done and where things have gone just in the last year, let alone the last few years. So I think it's anyone's sort of guess from there. But yeah, we made the comment just a few days ago with regard to nickel in Australia. I think it was sort of a two sort of phase thing. It was the supply coming online in Indonesia was one aspect of it, and the other side of it was perhaps people would slightly bet on the wrong horse with that type of battery being the dominant technology going forward. But who's to know where it goes from here?
But it was all the processing technology that also really evolved very quickly in Indonesia, how they could use these Class 2 laterites and then convert them into the nickel matte, which could then be used to convert into Class 1 and be used in nickel. I think initially, correct me if I'm wrong, a lot of the thought was, right, to put all this nickel into batteries, we need a heap of Class 1 nickel sulfides. But then that Xinjiang group, everything really got the nickel matte conversion technology to where it is now. So all of this nickel for batteries can be supplied from the nickel laterites, and then couple that with the fact that the LFP uptake has been much bigger than the NMC batteries. It's sort of the perfect storm of why nickel's the way it is now. I wonder if a catalyst for nickel in the future would be because for me, if I'm thinking, right, I've got to buy an electric car, but I'll drive down south all the time. I'm like, oh, geez, I don't know if I want an electric car and be charging it up. And wonder if like all the infrastructure development with charging and everything until that gets to a point where everyone's comfortable buying a long-range EV to replace petrol or diesel, if that'll be when nickel will really start taking off. Because as you said, all the LFP ones have been bought for, more suburban travel at the moment.
Mate, you're posing that question to two blokes who don't own a car, so no comment.
God, you don't even pay a mortgage either. I wish no wonder you've got more money than me.
Yeah.
What are your thoughts, Trav?
Oh, yeah, echo both of your sentiments entirely. And it's, yeah, I mean, to what you say, JD, like all of the capital commitment. So think of the huge capital commitment to invest in all of this massive nickel laterite infrastructure in Indonesia, combined with all of the downstream sort of, capital investments in both China, also in North America, the IRAs, like there's very specific, incentives for all of these NCM facilities, right? All of that is made at a time when our perception of what the composition of batteries would be was very different. And because it's moved so fast, like you said, JD, maybe the policy is actually, not perfectly aligned to how the technology is actually unfolding and how the consumer tastes are flowing into that, which, would be another interesting thing to watch.
Absolutely. And my last comment would be kind of to what you said there, Matty, that talking about what we sort of adopt here in Australia, if you want to look to the sort of cutting edge and where EVs and stuff are being adopted, Australia isn't really the place to look. Places like China and loads of other countries are adopting these things far quicker. So it's interesting to see how they are being adopted and the various technologies.
And there's such a bigger market. Like we're not going to really, the Australian adoption of EVs isn't really going to move the needle globally for where material consumption's going to be. Maybe other countries around where people drive long distances, but what's your biggest markets? It's America and China. So
Awesome.
So they'll be the dominant influence on it.
Very good. So actually, Matty, I'm going to throw this one back to you. This is a comment from 10X Hunter on Twitter. Thoughts on the ChrisGina strategy of owning the rock in Australia? Do you think it's likely to pay off, or is it the next nickel fiasco? And an extra bonus question from me. Do you think there is room for one more billionaire, like a Mr. Andrew Forrest, to enter the arena?
Oh, I suppose there's only Chris and Gina at the moment in Australia, isn't it? That are really... What happened to Clive? Where's Clive gone?
Clive.
I think he's richer than ever with iron ore prices where they are.
Yeah, but he's not... he's after his attempt to be Prime Minister.
Has he paid his workers yet?
Yeah.
Well, I'm not sure he buys into the whole...
So the question was, what was it about buying the rock, and is it going to pay off or is it going to be a fiasco?
Yep.
Well, let's look at the rock they've bought, I guess. Gina's got Azure, and Chris, the closest thing Chris has got to Azure in terms of quality that he's bought are probably his existing, probably the existing ones he's got, like Wodgina, like the things he's got his hands on aren't like really world-class ore bodies that stand out. He's not in Liontown at all. Like you think of that's the thing, that's what's happened in this whole lithium cycle is that every Tom, Dick and Harry's come in to drill for anything, trying to get, even people getting a 5 to 10 metre interceptor bloody lithium were going up multiples like during this mania because they're like, lithium, we got to get on it. Now the bubble's popped and we're reverting back to the only ones that are surviving are the world-class ore bodies. And like, I guess back to your response early on about what you look for in a stock, all those things, and it relates to the cost curve. The cost curve is dictated by the ore body. Like it is one part of it, but sometimes investing is keeping it simple. It's like who has the best ore body? Greenbushes is the best ore body. Like Andover is one of the best is potentially going to be one of the best hard rock ore bodies.
Atacama, because you got to look at the whole sort of lithium, and it's not just ore; it's the brines as well.
Yeah, so and Atacama's like the highest concentration lithium brines, and in the perfect environment to evaporate it. So that's why they're the world class ore bodies, and that's why they will survive. So yeah, I think. I think Gina buying Azure, that's going to probably work out good for her because if it does come back, she's got a great ore body. But it really has to come back really high to make feasible your things like, because, Wildcat's a 1% ore body, whereas, we're talking Liontown and Azure's probably could be about 1.4 as well. Liontown's 1.4. PMET's Corvette, that's 1.4. So big difference from 1.4 down to 1. Delta Lithium, that's 1.2, but it's thin. and contains a bit of lepidolite on one side by the sounds. So, and it's going underground. So those underground thinner ore bodies really have to have that favourable lithium pricing environment to become feasible.
Yeah.
So
I reckon that theory of ChrisGina to own the rock, that's the right theory in iron ore, right? It's like absolutely right theory, but the cost. I was never a fan of the lithium is iron ore analogy. I just disliked it. I thought the cost curve's completely, different. I mean, there's no iron ore brines.
no.
The iron ore production out of Africa was,
It's coming, mate. It's coming.
yeah, but you know what I mean?
Next
Like
year.
WA was the only bloody place to get the good iron ore, that in Brazil. And that enabled super profits. So if you own the rock in the iron ore game, it led to super profits. And I'm not convinced that you've got the same structure on the cost curve in lithium yet.
Did that answer the question?
Owning the rock's the way to go, seems like.
Oh, owning good rock.
Good
There's
rock.
no point
Owning good rock.
There's
Yeah.
only no point owning rock if it's shit.
Yeah.
You got to own good rock, and that's probably what happened in the iron ore. That was
Yeah.
all the fight over what are the best quality, high grade hematite ore bodies, and BHP and Rio and that are just making shitloads of cash because they've got them. Where you saw, Atlas Iron back in the day, like they were under that much pressure, but they had to truck it distances and it wasn't as high grade, high quality.
They were an ASX 50 company at one point as well.
Yeah, but that was in iron ore mania, wasn't it?
Yeah.
Yeah. So, you got to own good rock.
Good rock. So
Q1
Trav.
on the cost curve, mate. That's
Yeah,
the good
the
rock.
cost curve.
Yeah, but that's the thing. That's where the competition is. So I think, you got to take your hat off to MinRes, I guess, in terms of I suppose Wodgen is pretty low on the cost curve. That's the second behind Greenbushes. But, Mount Marion definitely isn't it? You've seen the quality of the spodumene that comes out of there at 3.6%. He battled his way through the smaller iron ore plays. Now he's got the Onslow thing, but it's still not a BHP or Rio quality asset. They've got the transshipping thing. So, I don't know, he's making it work with things that aren't as high quality as what the big dogs have. So, I suppose you take your hat off to it.
Awesome. So, Trav, I'm going to throw out this comment to you from Ian from Twitter. And I've got a question that follows that. So, Ian asks, what's going on at Bellevue? Share price lost 30% since the first gold pour end of last year. Are shareholders being informed? Are they not disclosing something? Seen it too many times, ... And so the question is it possible to ramp up a mining project in Australia in this current economic and commodity climate without having a save raise? Is there anything management can do to avoid this? How many save raises can you go before the dilution is not worth it anymore? And are some assets even worth saving?
Oh, it's a good question.
Suppose if you're doing a raise, if someone wants to pay the money for it, it's determined by the market, isn't it?
Yeah, there are market forces at play for sure. So I guess the question is what's going on at Bellevue. I think, and I don't want to speculate specifics because I genuinely don't have information on this, but you often do see share prices sometimes lead information before it comes out, and that's kind of the complexity of mining operations where, they employ heaps of people and heaps of people start talking about how things are going, and then sometimes share prices lead performance. Sometimes the share price leading performance gets it wrong, by the way. I remember, both Calidus and Red 5 running really hard through a similar point in their life cycle to Bellevue. And as it turned out, both of them had real hurdles when it came to commissioning. So sometimes the share price isn't actually telling you the right information too. And I think the when I think of like the saviour raise, they call it, the saviour raise or the ramp up raise, I actually think some of that often comes down to the incentives that present themselves to single asset developers who are trying to come to market. They've almost got every incentive to make things look a little bit better than they are. I mean, when this comment probably doesn't apply to Bellevue, but it does apply to a lot of other companies. They are often marginally financeable. They only get financed because the market's good and, there's a whole bunch of factors that are going their way and they just get financed. And in order to get the finance away, they had to bloody chuck as much debt in it as possible as well. So there's all these things and they just get it over the line. And the way you just get it over the line is, well, every little fringe decision that you're making as a management team or whatever is kind of like, I'm just going to leave this number out, or I'm going to kind of only present the best part of it. And all those little factors kind of matter. And then all of those things compound. And then when you're actually executing, you're immensely fragile to anything going wrong. Plus, you probably overstated how things would look in the first place in order to just get finance, because that was your goal. Your performance rights vested upon FID. You had everything coming your way in order to get this thing financed. And then ultimately, who's kind of the victim in all that? It's the person who kind of supported and believed the numbers that are on the page in the first place and bought the shares at a price that were valuing in, the rosy story instead. And I think if you look at the opportunities for investors or whatnot, sometimes investing in those kind of capital raises can actually be a really clever idea if you pick the turnaround. The catch is you actually have to have some confidence that the operation will actually be profitable. You look at Red 5 has run so far, but they raised 90 million and things were looking really bloody dire in February, and it looks by all accounts they're making money now, and it's an operation that's a good gold mine. That's what it looks like, right? And it didn't always look that way. And then on the exact opposite scenario, Pantoro and Calidus have done a series of equity raises subsequent to going into production. And things, you're not as convinced that those are going to be profitable operations. That's still uncertain in the market. And I think if you participate in those kind of placements and you have foresight to it being profitable, those are good opportunities for investors as well.
So hopefully it all comes out in the quarterly, and you want to hear it from management. And the queries I have, and you want to see the execution of it as, okay, we know the ground's hard. They've publicly said that. Okay, are the stopes all coming out? Are they bridging? Are they coming out easy? Are the holes deviating because the ground's really hard? Look, as I said, even though it's a gold mine, is copper effect? Is there any copper there? Is the mill performing? Are you getting the recoveries? Is the cyanide consumption high or low? Is the water quality good? Is everything going to plan?
Grade reconciliation, dilution. These are things you look for in a commissioning process.
Because if you're getting deviation in hard ground because they're trying to feed it to get the meters, that's where the grade reconciliation comes in, because you're deviating away from the ore body and you're just excavating bloody waste. So we're about to find out this quarterly because look, they were $1.80 not long ago. They're back down to $1.30s, $1.40s, with gold price has appeared to remain pretty steady. But I think there is that question: are they going to be able to execute quickly without having to do another saviour raise? Because I know we said they were going to be excavating fresh rock from the start, which was favourable, but there's still a lot of other factors at play to get the operation into what we call steady state.
Yeah, they got great on their side, so
they do. Yeah.
Awesome. Just to round off the mining questions, we've got another comment from Twitter from 10X Hunter, and I'll put this out to everyone. Despite the big drop in coal prices, some coal companies continue to print cash and have great yields on offer. Do you see the broader market waking up to the attractive yields on coal stocks, or do the ESG issues trump returns for fundies?
I think there will be a disparity between the valuation for met coal businesses and thermal coal businesses. Both will be marked on low multiples for a long time. I can't see that changing, and I don't see, if you are comfortable investing with these assets, that's how you'll get compensated in terms of, capital growth there. But yeah, I mean, does that really answer the question, right?
Yeah, I think one thing I try and pay a little bit of attention to is how many energy transition funds were raised, these giant infrastructure energy transition funds that were raised, like Brookfield and the likes. And I think there is a trend of some of that capital now being allocated to old world energy, but they just wrap a plan around, we'll decommission this coal-fired power station earlier than in a responsible way, and now that's an energy transition story, but it's actually just the whole justification of the investment is around the cash flows that come from the hydrocarbon business.
Yeah.
You'd imagine that comes with sort of gas, then oil, and then thermal coal as the final one. But you're completely right when you see people stretching the mandates of what the funds were raised for.
So I think there, at some point that the yields absolutely do matter, and you start attracting the capital because people just stretch the rules of the capital because they want the yield.
Very good. Now, we've got a couple of personal questions for each of you. So,
does JD wear Sheila's underwear on the weekend?
Very good, Matthew.
Sorry if he does, mate.
We accept you.
Just
keep doing heaps of research. I don't care.
So we got actually this question from quite a few people. So, JD, what are your top reads from the Money and Mine bookshelf just behind you? What are your favourite ones?
All your nerd mates asking.
What have we got here? Trav, I think you've chipped in with a few too.
Oh, mate, you've read way more than I have.
I'm going to chuck a couple of Playboys up there for me.
I'll shout out a couple. I think we've mentioned the world for sale a few times about the world of commodity trading. That is just fascinating if you want to hear about the likes of Trafigura, Glencore and all those companies, how they operate and the sort of history that they've come from. And
is there any, do these have an accompanying YouTube video, JD? Because I'd rather just watch
mate,
YouTube.
There's a couple of documentaries. Plenty of them got documentaries for you. Or
I love it.
Netflix ones.
Yeah. You talk about Argyle a lot. You talk about...
Argyle's a wicked sort of WA discovery story up the diamond mine up in the Kimberley.
Obviously the money miners, which is the foundation of the bloody money miner term.
Yeah, and I'll just shout out the big score. That's about the discovery of Voices Bay. If you want to learn about Mr. Robert Friedland and about how he sort of came about, that's a pretty easy read as well.
Barbarians at the Gate. What's that one?
Barbarians at the Gate is about the biggest private equity takeout in history during the, private equity boom in the late 80s. It is just bonanza. If you want to hear about companies that have multiple corporate jets and the whole works, get into that one.
What about the Breax fraud? I see that there. That'd be a good one.
That is a ripper. And we're going to do an interview sooner or later with people that were, imminently involved and familiar with that story about the biggest mining fraud in history.
Imagine if we can get old mate that
Mike de Guzman
had his arms chopped off or whatever.
Yeah, we'll get him on the pod.
His body was found.
Yeah, we'll go meet him in Thailand or wherever.
If he's not dead yet, he soon will be after people.
Awesome. Matty, what's your favourite vape flavour?
Grape.
Grape.
I'm just all grape. Obviously, I'll keep the same thing at the bottom. That's just even if I did change flavour, but I've stayed true to the grape.
Would you believe that Matty only picked it up during Money of Mine? I would have thought the habit started 10 years ago.
Oh, no, actually, you wouldn't believe it. I actually went through a weird phase for a couple of weeks of back on the darts, and it coincided with meeting JD. I already knew Travel, and we're going to catch up. I'm like, oh, hold on, boys, I just got to have a dart. JD's probably thinking, what the bloody hell have I got myself into? Who is this?
It was a rollie as well.
It was a rollie. Yeah. Oh, geez,
not in a classy Marlboro or anything.
I could go a champion Ruby right now. Oh,
my mum
smokes
my
anymore.
mum the other day was having she's like, mate, you got to tell Matty to stop smoking his vape. You could passively. I'm like, Mum, I am going to. You don't get bloody crook from passively ingesting water vapor.
I think vape's the least of your worries, Trav.
Exactly, mate.
And last one for the day. This is actually really for everybody. Are there any areas of mining you want to develop and expand your knowledge through 2024 and bring onto the show, e.g. the TSX, ironing ore, mining surfaces, and there's probably a whole bunch of others as well?
For me, iron ore is definitely one. Aluminium. I want to learn a lot more about aluminium. Getting into, I expand. I had all weekend reading about bloody Cameco and the Athabasca Basin. So I'm trying to expand my knowledge on the TSX and uranium and everything. But and oil and gas. They're my group, buddy. grey areas, blind spots,
Nice.
I've got
and,
plenty
and
of
everything else.
Yeah, no shortage of blind spots here. Keen to learn on all aspects. Maybe I'll go about it the commodity way, like you did, Matty. I know is a big one that we just haven't touched on at all. Maybe Simandou gets closer and closer, and that gives us a good excuse.
But even
to dive into it.
the Pilbara dynamic between Rio, BHP, FMG, Roy Hill, and Hancock, like just that whole, even the history of how like the competition for tenements and everything like that is just. Yeah. It'd be good to really sit down with some old school iron orers.
You know what I'm actually most keen to get into more? Just geology. I think the level I have is very much 101 at the moment, and keen to, across the board, understand that better.
Well, you got a geo at home each night, your father, so that helps.
Whilst he's there, yeah.
Yeah, I reckon geology's a great one. I chucked that one in there. And I reckon not like just familiarity with the full suite of North American like companies is something I definitely want to build out, Al.
No. Awesome, guys. That's the questions for
Do
today.
we have any questions for each other?
Oh,
that's an interesting one. What do I want to know about JD?
I'll palm them off to fucking
I'll kick off with a question for Al.
oh, jeez.
Is there anything about banking you miss?
That I miss. I miss the people, not the hours, not the work, not any of that. No, the lifestyle's much better now.
What about JD and Trav? Do you consider what we do as a job? Like, how do you view if someone says to you, what do you do on Monday? And you say, I've got to go to work. Does that feel uncomfortable for you?
To start with, what do you actually say when people say, what do you do?
I'm like,
I steer clear of the word podcaster.
Oh, I sound like a dickhead. But when they say, they say, Matt's got work on Monday. I'm like, it just doesn't sit. It's a real weird thing we are doing.
Couldn't
do you
agree
have
more.
the same thing?
Yeah, it is. I don't think there's a word, but yeah, I don't know. When we were selling hats, I was really enjoying selling hats. So I thought, here's a job
I'm in the
title I
merchandise
like.
game.
I'm a hat salesman. I like that. That one sounded good. But yeah,
Even saying we're in mining media doesn't even feel right.
Yeah.
Because I feel we're not journos.
Just say do research.
Do research.
Bland statement. But people can ask more questions if they're interested.
Because if I depicted like, right, what's your business model? We do all the mining news for free, and then I'll dedicate a good 2 minutes each day to talking absolute rubbish and fake lies about mining businesses.
yeah,
And they somehow pay me for it.
yeah.
That's the business model.
Mining adjacent businesses.
Mining adjacent businesses.
Well, there was a comment.
It's bloody brilliant.
Mate, did you see the
You've
comment?
been getting phenomenal feedback.
So good.
You've really taken it up another level this year.
There was a YouTube comment on yesterday's video saying you're the Russell Coit of this era, Matty, thanks to your infomercials. So, mate, that's like a superpower in and of itself, the ability to deliver entertaining infomercials.
Mate, well, there you go. All the sponsors we've got, because I was like, the whole thing was going down that route. It's like how I'm taking these people, these companies' money that they have worked their bloody ass off for. I do not want to do because all the podcast ads out there that are just the same one, read off a script, repeated every episode, pre-recorded. I'm like, I'm not giving that value to someone handing money over to us.
Yeah.
And it's like, how can we make this? And it wasn't even just a business decision. It's like it felt like a moral obligation. And I think that the fact that people actually enjoy listening to them, which means that everyone is hopefully listening to them. Some people probably fast forward through. Bloody get a dog up yous. I don't care. But to all those that listen, thank you very much. I hope they're bloody engaging. And nothing better than someone that listened taking action on it and engaging that company, and the company actually gets a return on investment for the sponsorship, because most other advertisement, I think, is bloody anyone that says brand awareness, you're just bloody wasting your money.
Given how loose we are with the show, I'm actually really impressed that there are a bunch of businesses that see brand benefit in associating with us.
Well, I think, and as you said,
It'd be crazy not to, Trav.
well, I think that why I don't class it as work is because we don't have a boss. Because it wouldn't work because bloody we argue enough between ourselves, let alone someone else telling us. Imagine someone telling Trav what to do and he had to do it. You would. How'd you go? You would get the shits. That would not go well.
I don't think with any of us that would go down too well. But here we are.
Oh, welcome to bloody. That's why I was glad to get out of underground mining. I was mostly getting told not to do the wrong thing. So
You could have run the joint though.
oh fuck, geez, that is bloody. I wouldn't.
I would have tuned into your quarterly calls quite eagerly.
Oh, I wouldn't. I reckon one day after like bloody the whole underground 12 years in underground mining and having both the engineering and the underground, and then this whole exposure to this finance world, I'd love to have a crack at an MD role one day, but do it based on everything I learnt, the good and the bad of each part.
I'll buy a couple shares for moral support.
No, I'll be big on the bloody. I'll be running it. What have I learned about what the best companies are? The best companies like your Capricorn and all that, they're not promoters. They run it lean. They've got
They manage their costs.
good management, and they've obviously got, because everyone's on bloody 2 and 1 out there, so they must have a great culture that everyone feels a part of the business and wants to work 2 and 1 for them because they're a good business. And if people want to work there and they run it lean, that's obviously a testament. So creating a bloody good culture in your mining company, and if you're ticking all those boxes and you're not bullshitting the market and you're technically capable, like they haven't got a world-class ore body, but they're trade at what they trade at because they make free cash flow.
What would you call your mining company, Matty?
What would I call my mining company?
Matthew Michael Metals.
HOO.
Triple M.
HOO. Hootaroo.
Love it.
How good would that be?
Good stuff.
Oh, mate, we're derailing the
Don't
conversation.
offer me MD jobs.
On that note, I think we've got a couple sponsors to thank.
Right, but no,
Jeez.
this is like the raw. This is the raw us. No presentation, no prep or nothing. This is people want to see the raw version of you, JD. They want to see the original chip.
I'm sure they're not losing any sleep over it.
Righto, thanks to all the partners. Bloody love your work. All those people that gave us money that we love. I haven't got the screen. Let's.
Okay.
All right,
KCA.
InvestorHub, DSI Underground, KCA, like you said, Ali, Anytime Exploration Services, K-Drill, Future Proof,
MMTS, Brooks Airways, DSI,
Terra Capital.
Thank you.
all the old ones as well. JP Search, SMEC, bloody, or just everyone. Just love yous all. This is like a day of reflection on Australia Day.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.